Today we are going to talk about chapter number 6, variable costing, and in which we discuss two important part of this. One is called variable costing and the other is called absorption costing. All right, so I have picked this question 627A from the back of the chapter, and it says preparing variable and absorption costing income statements. And this is the problem statement. Linda Foods produces frozen meals that it sells for $7 each. So that's the sales price. Company computes a new monthly fixed manufacturing overhead allocation rate based on the planned number of meals to be produced that month. Assume all costs and production level are exactly as planned. Then the following data are from Linda's Food first month in business. So what we have told us is units of produced and sold. Sales 1,000 meals, production 1,200 meals. So basically in the month of January, they produced 1,200 meals and they sold 1,000. The variable manufacturing cost per meal to prepare is $3. Sales commission that we have to go per meal is $1. So if somebody is selling 5 meals, they will receive 5 $1 bills or $5. Total fixed manufacturing overhead is $660, and total selling and administrative cost is $500. That's information is given to us. They are asking us in requirement number 1, compute the product cost per meal produced under absorption costing and under variable costing. So I have to prepare a product cost per meal under absorption costing and variable costing. So I have to do both, and then we have to prepare an income statement under both absorption and variable costing. So let's start working on this problem on the next page. So variable, number 1, variable manufacturing cost and I'm going to make two columns. So first we're going to do for absorption costing. So let's call it absorption costing. Its variable manufacturing cost is for absorption costing is $3. Fixed manufacturing cost is how many we are producing, right? So they have told us the total fixed manufacturing overhead is $660. For how many meals we have produced? 600 meals. So this number is connected with this is 660 divided by. So the cost is going to be $660 or spread over 1,200 meals. So that means it's going to be close to 50 cents, but let's calculate. 660 divided by 1,200 is 55 cents per unit. So that's $3 per unit, and this is 50 cents, 5 cents per unit. All right, so total manufacturing total unit product cost or manufacturing cost per unit, same thing, is going to be $3.55. Okay, now we're going to talk about variable costing. Under variable costing, our variable manufacturing cost is given to us is $3 per unit. Okay, and fixed manufacturing overhead, it's a part of the fixed cost, since fixed manufacturing cost is part of fixed cost, because in variable costing we have separated all the variable costs on one side and all the fixed costs, so we have divided. So under variable costing, what we have done is we have taken a cost and we divide the cost into two parts, variable cost and fixed cost. Since absorption costing follows GAAP, generally accepted accounting principle, we cannot do this. And variable costing, it's a part of managerial accounting costing, or a cost accounting, in which we can divide the cost between variable costing and fixed cost. So that's the reason part of the fixed cost is going to since fixed manufacturing cost is part of the fixed cost, we are not going to use in variable costing. So that's why our total product cost is going to be only $3 per unit. So in variable costing is $3 per unit. In absorption costing following GAAP is going to be $3.55. All right. So this is what we have. That's our question number part A. We have calculated. So this was cost, compute the product cost per meal produced under absorption costing and variable costing. That's the difference. Now we have to calculate the absorption costing income statement and variable costing. So absorption costing again is follows GAAP, does not follow GAAP. GAAP is generally accepted accounting principle that we have discussed in Accounting 2301. Okay, very good. So let's move and do the second part. Okay. So again, we're going to do in second part absorption costing. So we're going to say income statement. Income statement using absorption costing. All right. So sales revenue. How many units we have sold? We have sold 1,000 meals. We produced 1,200, but we sold only 1,000. So in GAAP, revenue recognition principle, you remember from the Accounting 2301, is you can only recognize the revenue that you have earned. So these are the 1,000 meals, even though you have produced for 1,200, but you didn't sell 1,200, you only sold 1,000. So you sold $7 per unit for 1,000 units or 1,000 meals. So your revenue is $7,000. Now cost of goods sold is going to be $3.55 that you have calculated. So you have $3.55 into 1,000 units that you have sold. So that will be 3,550. That will give us gross profit when we subtract that. You remember this from your Accounting 2301, will give us $3,450. Okay. And then you have a selling administrative cost. Selling and admin cost, which is given to you over here, is $500, and you have a sales commission per meal is $1, which is sales, and this is fixed selling and administrative cost, which is basically salaries. So you have to add two things over here. You have to $1 per commission that we have sales commission. So we have $1 multiply by 1,000 units plus the fixed part of the selling is 500. So that will give us 1,000 plus 500 is $1,500. And that give us an operating income of 3,450 minus 1,500 would give us 1,950. So this is our operating cost. Now, in this next part, we are going to calculate the income statement using variable costing. All right. So in variable costing, we have a sales revenue. Again, we are selling $7 per unit and we are selling 1,000 units. So that will give us $7,000. And the variable cost is different. In the absorption costing, it was $3.55, and here is $3. So we're going to use $3. And we have another variable cost, which is sales commission per meal for $1. So we have to add that $1 here. And then we're going to multiply this by 1,000 units. So that's 4 multiplied by this is $4,000. And that gives us a contribution margin of $3,000. Then we have to subtract the fixed cost, and the fixed cost we have two. One is the total fixed cost of 660 and a fixed selling and administrative cost of 500. So 660 plus 500 is 1150. So our operating cost would be, oh sorry, did I calculate correctly? 660 plus 500, 1160. 660, yes, sorry, 1160. And then we're going to subtract 3,000 out of it, will be 1,840. So the operating income you have noticed, so if I keep both side by side for you, you notice the operating income under absorption costing is 1,950 and over here is 1,840. The only difference here is the absorption costing does not care how many you produce. It only takes into consideration what you have sold. But in variable costing, you have to take into consideration what you have produced as well. So you notice we produced 1,200, but we only sold 1,000. If we have produced 1,200 and we sold 1,200, these two numbers, operating income for both these numbers would be the same. Otherwise, they will be different. Okay. Please let me know if you have any question about these questions. So there were only 2 parts of this, and the second part has 2 more parts, absorption. So we calculated this. Please let me know if you have any question. I will be happy to answer your questions via email. Thank you.